Okay, guys. Welcome to today's video. Continuation from where we stopped here on the previous video. Remember, we are talking about the power of three concept, and the concept involved accumulation, manipulation, and distribution, which we established yesterday that it is one of the favorite market maker model, right? This model is used by smart money, right, to trap retail traders, right? So we explained all the concept yesterday, and both for we mapped out for bearish scenario and bullish scenario, right, where you have market manipulating, right, accumulating, then all of a sudden you see a manipulation move, then market makes a pullback, right, and distributes. Okay, then you also see, so this is the accumulation, this move, right, market was accumulating, then decide to sell, right? Why would do we call it manipulation? It's telling buyers, telling traders that, oh, we are going down, then all of a sudden aggressively moves upward, right? Same thing in the bearish scenario, where you have market accumulating, then all of a sudden it pushed up bullishly, then manipulates the price to bearishly and continue going bearish, right? So this is the power of three strategy, and we are going to be going into our charts. So if you're coming across this video for the first time, you want to watch the previous day video, right, where I talked about the part one. This is the part two, and today we'll be using BTC to identify this particular concept, and let us see how it has been playing out. And so far, the recent swing of BTC from this region to this region has been showing this particular setup, so it's a good time to actually back test it. Okay, so you would not notice the move if you don't know about the particular concept, right? You think market is just there doing other things, right? You will not notice the move. So what do we want to first spot? We want to spot accumulation, where market, understand what a ranging market is, where market is creating series of higher highs, not series of higher, series of equal highs and equal lows on a particular range, right? Okay, so let's take a look at that. Let's identify where and how often market has made that move. So you can see there's several ones here that market has done, right? The one here, you can see market did a kind of, I go to lower times, and so you can see that range completely. So we have one here. This is a period of accumulation, then all of a sudden market sold aggressively to the downside, right? Then all of a sudden market would makes a pull to the upside. There was an incomplete pullback, market ranged, came back and tapped and sold and bought, right? So what move happened here? Let's identify that. We had accumulation on this region, then you had what? Manipulation. Market made a sell move as if we're going down, then all of a sudden market aggressively took out the top region of this accumulation, right? Identify that as liquidity, right? On the range you have liquidity, so this is the accumulation. Okay, then price aggressively manipulates, right? When it comes, it's sold before, then all of a sudden aggressively buys. So this move is the manipulation, right? Then the distribution move is when market makes a kind of an incomplete pullback, right? Comes back into and buys. So you can see this particular move market made was this. So this is a sweet what market maker point of three model. Price accumulates, manipulates, makes a fake pullback, comes back down, taps into the particular manipulation POI, and what? buys, right, aggressively. Okay, so you can see market making that move right here. We also have another one that the market did right here on this range. You can see that clearly. Let me go to 45 minutes time frame. See this, when it was trying to build this move, it also did another move here. There was a form of accumulation around here, right? Accumulation around here. Then all of a sudden, the market made a pull down, right? Manipulate. Oh, we are going down. Then all of a sudden, you saw an impulsive move taking market off, sweeping this, right? Make sure you draw this pattern on your chart so that you be looking at it and get used to it, right? Sweeping it completely. Then all of a sudden the market came back into the range, took out a particular, if you notice this, there was a kind of a pullback here that creates structural liquidity. Let's go to smaller time frame. This is that particular range market was on. Then market manipulates, swept the lows of the range, took higher, made a structure like this. If you notice, this one was just a straight structure. So let's draw out the move on this one. Let me take this out. This was how market manipulated. Did the structure here. So you saw that range. This was the range market created. Then all of a sudden market aggressively broke out of the range. Then made a pull, created an internal structure like this, and manipulates outside. Then distribution came, market came back to take out this internal structure and distributes. So where did we catch our trade? If you notice, we caught a beautiful trade here. Where did we caught our trade? We caught our trade here on the internal range liquidity, which was this particular imbalance that was close to the structural liquidity here. Unlike this one, that market swept this out and came for the particular order block that create this structure shift here, right? You can see market repeatedly is repeating this concept all over and all over again. You would not know that it's power of 3 playing out because you don't know about power of 3. But now that you know about the accumulation, manipulation and distribution, you will now be able to see it on your chart, and you know that this is what market is doing. So it kind of tells you the direction market wants to actually take, but you must wait for the move we want to catch is the distribution move. For example, let me repeat this again. When market accumulates, we do not make a decision. For example, if you just see a range, right, when market is accumulating, then let's say market now manipulates down, right? You don't make a decision here when it's like this. You don't basically confirm that, oh, this is a market maker model. No, you don't do that. You have to wait first for, say, because there are some times that you might see a move like this, and market is only coming back to this and will sell off. Okay? Because market accumulates, then makes an impulsive. This accumulation might just be creating a sell side impulse or a supply zone accumulation, then an impulsive move to the downside. The market pulls back into that range and sells, right? So you would need to wait to see the move completely. So, but when it's now a market maker model that's easier for you, it's when markets now actually completes these manipulation moves. It means market has taken out the sell side and the buy side liquidity on this particular range. Okay, so now once you see this move, just like I explained yesterday, this is now a complete, right, accumulation. This is a complete manipulation. Why is it called manipulation? It was selling, then all of a sudden it now bought. It induced me to be looking for sales, then all of a sudden it buys. Then what do you want to catch? You want to now catch distribution. It means the continuation of the move. It means market may sometimes create a move like this that's incomplete, comes back, continue the move. So you want to catch the displacement move, the continuation after manipulation. That's now the move you want to trade off with. And as smart traders, we always look forward liquidity, so that market will need to take out liquidity. So for example, if market has made a manipulative move, right? You're waiting for distribution, then market comes, right? Market comes low, and market does not, and you're using your Fibonacci to check this, right? If market is coming back down, you don't just buy at any region. As long if market does not come, you're looking for buys. You will not say, oh, because it's power of three, you will now forget all the other concepts you use for Confluence. No. Now market has accumulated, market has manipulated, market is coming back into the particular range, and all of a sudden market just comes here, and you are buying off here that it's not inside the discount region. If you take a buy trade off this region, right, it will be an inducement for you, because market did not enter into the 50%. Then all of a sudden you see market come, take out this inducement, comes into a discount region, then completes the distribution move. If there is an internal range structure here, while market was manipulating and there was a internal range structure, then market pulls back to take out that structural liquidity. Valid trade. Okay, valid trade. So you want to be careful of those moves, right? Of course, I'll explain more so you guys will get it. It's a beautiful concept to look out for on chart, and it plays out almost like I've not seen, if the move happens, I've not actually experienced it fail, right? You see how the market came back down, tapped into this POI and bought successfully, right? Tapped into the POI and bought successfully. Same thing here, right? This one took us this and we had a beautiful trade. Then what happened again? We can still see this move playing out again. Now this is the first one, this is the second one that market completed. Now this is the third one. If you look at this, there's actually a range here, right? You saw a low, a high. This high that gave birth to this low. If you look at this, now always use your rectangular tool so that you can comprehend how the range is forming. Now this particular range is even way more longer than this and this. This one was a smaller range. You can see this one, the range. While this particular range, it happened within 4 sessions. It means New York started ranging, Sydney opened, right? Asian session opened, London opened before New York again broke out. Now this here that happened currently on BTC now, we have tested it 1-2 times, it played out, right? But what happened on this move, when we have accumulation, market manipulate to the downside, accumulation, market manipulate to the downside, right? Now this particular accumulation, look at the manipulation to the upside. So what do we have here? We have something like this, accumulation, right? Then we got a breakout on the upside, market manipulated and has taken down the structure. You can see here, this is the range. Look at market taking out the structure. So this is what we are looking at. Market did a move like this. So for me, this is the manipulative stage. So what would happen here? I'll be waiting for market to do a what? To complete the distribution. Now there's a structural liquidity here. There's a POI here. So what will I be waiting for? I'll be waiting to catch the distribution phase. This is power of 3. 1. And this other side, we saw the manipulation to the downside, then up. Here now we have the manipulation to the upside. So the breakout upside, usually the fake move. Then when market comes back to take out all the liquidity below the range, the accumulation, we call that the manipulative move, which is this one, right? Just like the way we had here. Let's go back to that time frame so we can see that structure very well. Just like when we are accumulating here, then market manipulated to the downside, then made an internal structural low and broke out to the upside. Then all of a sudden you saw market coming back to take out this internal structure, then distribute. Same thing has happened here. Market accumulates, manipulates to the upside, comes back down, take out the structure, right, creating an internal range structure. So what will I be looking out for on BTC, right? I'll be expecting BTC to make, come here, take out this, right? Take out this structural liquidity, tap into the particular supply zone on the manipulation range, and continue selling to the downside in order for this to complete its move, right? So you can see how this particular concept is playing out, has played out one, successfully, two, three times, right? That's what I'll be expecting the market to create such moves. Okay, so that's how it works. You would need to be able to see it, and more of back testing, study it on your charts for you to be able to see those moves properly. Okay, but you can see it playing out. You can back test it on different, what's it called, different pairs, different time frames, and you see that, oh, it's actually working, right? It's actually working most of the times. You can see it. If you had known this move, you see it, and it will also confluence any other concept you might want to trade off from. Like from this particular trade, when I took this trade, it was just based on internal to external liquidity, right? But looking at it well, it also completed the AMD move: accumulation, manipulation, distribution, accumulation, manipulation, distribution, which is what is similar happening here. Because market, if you go to the 4 hours time frame, you see it very well. You see this 3 candle move, 1 2 3, has created a particular, what's it called, supply zone here, right? Then market sold aggressively, creates an internal structure. You can see a fair value gap just below your what, point of interest, right? And there is an internal structure here that market has created, which can serve as a form of what, inducement or liquidity, right? So what does that mean? If market is coming back into this range, right, into this range, there might be an opportunity for market to tap into this point of interest and continue and distribute. Because for me, this is accumulation, this is manipulation. I'm waiting for what, distribution, and I want to catch trades of what, distribution, just as how it has happened when we saw accumulation, manipulation, distribution. The manipulation took out the structure, then market came and continued the distribution to the upside, right? And this range is actually much more stronger, and we can also confluence that with the 4 hours what, supply zone here that market has tapped into, right? We can also confluence that to add as a confluence, right? This sell order block that market has tapped into. Then if you're looking at this with your analysis time frame, you see that, oh, market has been buying all the way here very slowly. Now it taps into this and shifts structure. So this was the previous low. Now if you don't want to even look at this in the AMD version, you don't want to look at this based on accumulation and manipulation, you look at this based on structure. There was a low that gave birth to this high, and market has what, shifted. So this is a clean market structure shift here and a pullback, right? So what do we say? First pullback after a market structure shift is usually an inducement. So a low that gave birth to a high, the market tapped into higher time frame point of interest on the 4 hours, which is this, right? Which is this supply zone. So a low tapping into a supply zone, then all of a sudden shift structure internally. Then you're not having, what's this? Right? You're not having a market structure shift. And the first pullback after the MSS is usually liquidity, right? Which you might be expecting, will be expecting market to make a move, a buy move from here back into this range to sell off, right? Since the structure has shifted internally. So that will be the move you might be expecting currently on BTC, right? Based on all this confluence. So you even looking at normal SMC market structure shift, liquidity target, right? This will be a good point of interest. Using the AMD accumulation manipulation distribution strategy confirms that when we now look at this move as accumulation, and this pull out from this range as what, manipulation, right? So it's just basic, something like this: accumulation, a pull out of the range, manipulates, right? While it was manipulating, it gave birth to an internal structure and manipulates. So what will I be waiting for? Pull back, distribute. So it's the distribution that I want to now catch, right? It's the distribution that I want to now catch. So this is the particular structure on BTC, and there's no way price will be pulling towards this region now. I would not want to take this trade, because of course you have seen the setup, you've seen the strategy, you would take it. Okay, so that's how beautiful you can be able to identify the AMD, and you would be able to backtest the power and see that it actually works, right? Majority of the time, as long as I've not actually traded this that it has not worked, if I see it, right? But basically, I'm an SMC trader. I don't always look out for AMD. Once I see my liquidity, you see that just the way we identified this without even using AMD concept, we see a market structure shift, a POI on 4 hours, market have shifted structure, the structural liquidity, there's a point of interest, a 4-hour fair value gap, boom, trade can happen there if market decides to move upwards. Is it compulsory? Of course, this is crypto trading, and most of what we do here is based on probability. But based on all the confluence and all the evidence we have seen, we can say that, oh, market can make that move, right, to the upside. So that's that for this video. So even if you want to catch buys to this way, you should be very careful, because we are still on the manipulative move. Market can just decide to take you out, right, before making that move to buy. So you want to be very, very careful, and maybe look for trades off the rejection block. I usually target 50% level of the rejection block. I think I'll make a video based on rejection blocks so that we see that as Confluence. So that's that for that, guys. Tomorrow we'll continue and we'll look at this structure. We'll talk about more, right? I'll be sharing more on this, so that it should just be like a 3 parts, because I don't want it to be too long. So thank you for watching. I hope you've learned 1 or 2 things today.